And with our thanks to Capital Economics, Julian Evans-Pritchard, senior economist, has distributed this chart. It's about iron ore flows. It also ties in with what Scuddy, I think, is going to have a chat about.
Yeah, I think, guys, my view today, just when it comes to the potential for supply chain disruptions, and we know that China, of course, has been targeting select Australian imports over the past year as part of its program to go and try and tighten the screws and get us to go and appease some of the things it's got some troubles with at the moment. Iron ore hasn't been touched as yet. It's understandable so because of how important it is to China. Yeah. If they went and to go and cut off that, it would basically throw their steel sector under the bus and probably upend their industrial sector in the process. But longer term, that note from Capital Economics noted that there's an actual scenario that within the next sort of 3, 4, 5 years where China could actually get to the point where it could go and cut off Australian imports. Now, lots of moving pieces of the puzzle there. Doesn't necessarily mean it'll happen.
I'll believe that when I see it.
Yeah, it's interesting to see because, of course, iron ore prices, where they sit at the moment, both in prices and export volumes at record highs.
I was going to say, don't forget, $36 billion export record for April, so words are not translating into deeds.
Well, sticking on the iron ore front, Dalian futures were down about 3% overnight, adding to the losses that we've seen over the course of this week. So what to make of this dip? Is it part of a longer-term trend, or is it just an opportunity to go and buy? Let's find out. Trent Primmer joining us from Barclay Pearce Capital, live at the desk here in our Barangaroo studios. Trent, it's good to see you.
Thank you for having me.
What do you reckon is going on in iron ore? China's government has spoken. They want to go and eliminate speculation in the market. We've seen things like this happen before. Will they succeed?
Look, we don't think so. They're cracking down on basically local hoarding, speculation and price fixing. I think any short-term downward movements in the iron ore price is an opportunity for us to accumulate, and we're happy long-term holders. Look, even if the iron ore price comes off 10-15%, that's quite high. I think demand will continue to outrun supply though, and we're confident holders of iron ore longer term.
And that's because we're in an envious position for two reasons. One is high grade, and two is Rio and BHP can punch it out for $15-20, right?
Yeah, exactly. Sort of that lower cost spectrum. Global governments all across the world focusing on infrastructure spend. It's a way of putting people in boots during the COVID crisis, and obviously improving unemployment numbers and figures globally. So we expect that infrastructure spend to continue to drip through, and the iron ore price to benefit as a result. So
let's switch across from bulks to precious metals. Gold, pretty divisive when it comes to the outlook. A lot of people are very bullish. A lot of people are pretty bearish about it. You can see driven by real yields, US dollar are very key factors in that. $1,900 an ounce, just above recently.
Yep.
What's your take?
4-month highs. I've always been a pretty staunch supporter of gold. I've traded a lot in the past. I like it around these levels. We like it longer term. You've got inflation hedging assets like gold doing well around this period. Gold itself ended positive, I think 13 out of the past 16 sessions. You've also got crypto coming off and being quite volatile at the moment. I think people are looking at typical risk hedging assets like gold. I mean, it's tried and true, right? Over the past several years, investors have flocked to it as a storage of wealth, particularly when inflation's rising and the market's slowing down or coming off. It's definitely where you want to be.
Yeah, it's interesting that you went and mentioned the crypto space, because some people have suggested that maybe there's a bit of switching between the two. Do you think it actually is taking place?
100%. You're seeing the flow on of wealth out of one asset class into another, if I can call crypto an asset class at the moment.
Oh, thank you.
So I think gold's definitely where you want to be, and yeah, any time that there's market volatility or particularly volatility in something like crypto, you're seeing people, sort of taking their money out, storing it into more reliable asset classes like gold.
Yeah, no, we're skeptics here, so you're in good company. So I'm actually interested in what you're saying with the China story, because so many people who are analysts and mining specialists are calling iron ore to 160, 150, 100. Are you more optimistic than that on the price front, or you're saying that fall doesn't matter in terms of dynamics?
I don't think it matters a huge amount over the short to medium term. As I said, we like it longer term. And I think if you're looking at some exposure in your portfolio as an investor and you're happy to hold over the next 3 to 5 years, short-term price movements like that shouldn't worry. I mean, yes, it has to cool off, eventually. And I think the last time we spoke, we were pegging sort of third quarter, fourth quarter, we'd see some sort of price consolidation in iron ore, though that just means that we're happy to buy around those levels and hold longer term.
All right, fantastic. Thank you for a buoyant update. We're always happy to hear that here. Thank you so much, Trent from Barclay Pearce. Cheers.
Thank you very much.